right, thank you everyone. We've got a very fun discussion today about what's been one of the hottest trends of the last couple months in Bitcoin Treasury companies. And I'm joined by a true legend in the Bitcoin space, Adam Back. Better known for his work around cryptography and some of the underpinnings of Bitcoin. So I kind of wanted to start there, Adam. Like you've had literally a history in Bitcoin since the beginning. And are much more known for your technical contributions to Bitcoin. What kind of piqued your interest in the financialization and the treasury company theme?
Yeah, I mean, I was actually an active trader in the mid-90s, kind of a day trader, then a value investor, and certainly interested in macroeconomics and trading and the concept of trying to preserve your savings against inflation. And so, you know, I sort of put trading aside while I was focusing on my career in kind of cryptography and startup environment. So then started Blockstream, got involved with Bitcoin. In 2014, Blockstream was started, and then, of course, Michael Saylor started his Treasury play, and so I thought that was an interesting and valuable undertaking because he was sort of leading by example and then started a conference series to try and show other public market companies how you do it, because, you know, looking at it from the outside, you think, well, just buy Bitcoin and cold store it, but for a public company, it's not quite that simple because right. You have to, you know, you have an auditor, you have to explain the account, you have to figure out the accounting. Maybe you have to use an independent custodian because the auditor requires it and your shareholders expect it. So there are a number of things they had to go through to actually get it done, and he was interested to sort of promote that concept to other public companies. And so, you know, at some point in there, I bought some of his shares because I thought, you know, I wanted to support what he's doing, and if a lot of Bitcoiners bought a little bit of his shares, you know, his market cap was a lot smaller than Bitcoin, so it wouldn't take that many Bitcoiners, there are lots of Bitcoiners, if they bought a little bit of his shares, you provide some kind of financial support that if Wall Street didn't like his strategy, the Bitcoiners would buy the shares off them, right?
Sure.
So that was the concept, but now, of course, he famously, you know, was a sort of relentless buyer. You know, he would buy Bitcoin, and you think, oh, he's got to be out of firepower, and then he'd do it again and again and again and again. So he's really explored the full spectrum of different ways that public companies can access capital, and I think that's been useful. It surprised me a little bit how long it took before any other public companies joined. Now, of course, today, that's turned around, and there are a lot of public companies in a very fast pace of new entrants coming to the market.
And, you know, I guess from your entire history in Bitcoin and all the developments you've seen, were you expecting the, I guess, commercial, corporate, institutional adoption to happen in this way?
Yeah, I mean, I think effectively, you know, everybody who's investing in Bitcoin, you know, they're looking at it from various perspectives, but effectively you're participating in an arbitrage between the mispricing of Bitcoin today and its, you know, its potential value in the future. And so, you know, effectively, Bitcoin is the hurdle rate, meaning that, you know, if you're doing saving in some other asset or, you know, via a professional fund manager, if they're not keeping up with Bitcoin's performance over the long term, you should probably stop that and buy Bitcoin instead, right? And so
it's a lot less work.
Say again?
It's a lot less work.
Yeah, and so I mean, it's proven to be extremely difficult to outperform Bitcoin over the last decade. You know, most people who invested in startups, even Bitcoin startups, or did any other kind of investing, they typically realized afterwards they should have just bought Bitcoin and held it, right? And so with that backdrop, the question is, how should people operate a company? And so, you know, Michael Saylor started that journey just as a defensive method to protect the spending power of their cash reserves. But actually, if you think about it, the only way for generally a company to, you know, match Bitcoin or even potentially outperform Bitcoin is to buy Bitcoin and use the capital markets to try and increase the Bitcoin per share, operate their core business, take some of the profit, use that to buy Bitcoin, use some of the profit to expand their core business, their products, their services. So, from that point of view, I think eventually probably all companies will be Bitcoin treasury companies, eventually.
Well, I think that's the title of our discussion today. How do you see that playing out over the next, I guess Saylor's 5 years into his strategy. Where do you see this trend really going over the next 5 years?
Yeah, I mean, I think, one question I've heard from different kind of professional investors who are, just getting to grips with the treasury company playbook is they want to ask the question about how scalable the treasury company strategy is. And by that, they mean if there are more, if there are twice as many companies, will it become less effective? Will it saturate the market or something? And the scalability of a trade, at least in arbitrage, is a real phenomena because, if there's a mispricing, let's say the kimchi premium is an example, right? So in one country, Bitcoin is priced a bit more expensively because of some capital controls or other factors, and somebody will try to arbitrage it. And if they put enough money into it, the opportunity will disappear, and they will have made the market more efficient. So they're effectively asking a question like that. But I think the point is here, the mispricing is rather severe, and it's an extremely large addressable market. So, of course, nobody knows today, exactly what the Bitcoin addressable market is going to be ultimately, but you can certainly see there's a lot of monetary premium and there's some extremely large asset classes like the fixed income world, real estate, and even, the stock markets. You can see the US stock market is highly correlated to M2 monetary expansion. If you take that factor out of it, it's approximately flat, in fact, right? So effectively, probably what you're looking at is people just trying to protect their spending power by buying stocks. And if Bitcoin is able to replace that, that's actually a better thing for everybody, in fact, right? You get more accurate pricing, you get better enjoyment from real estate because it's not overpriced by being an investment asset,
Sure.
and you get a better return on fixed income. So I think effectively my answer to the scalability is it's extremely scalable and could absorb, a lot of the free cash of some very cash-rich companies like Berkshire Hathaway, Apple, Microsoft. The size of that arbitrage could swallow that for breakfast and keep going and take a few decades to close the gap. So from that point of view, I think it's very scalable, and maybe there is some sort of positive reinforcement as well that the market is still trying to understand the treasury companies, trying to understand Bitcoin. So if things become widespread and common spread, that is sometimes what it takes for people to start to feel comfortable, to understand it, to have confidence, because they see other people adopting, other people investing. So, there are, of course, for people from a Bitcoin perspective, they're looking at Bitcoin, the asset class, electronic cash, self-sovereign money, and they wonder, what is this thing with public companies buying Bitcoin? But ultimately, the capital markets and the ability to organize economic activity in the form of a company is a big part of the world economy. It basically took took human productivity to where it is today. So it's really a basic part of modern society and the ability to develop products. So I think it's quite natural that companies are going to want to participate there, and so it's just another part of Bitcoin adoption. It's a new vector of adoption. And you can see that the Treasury companies collectively are a good part of the purchasing, the inflow of new buying within the market. And of course, the ETFs are also absorbing a lot of Bitcoin quite quickly nowadays.
Well, they certainly have been a strong, sustained bidder in the Bitcoin market, which benefits the whole community of holders. But at the same time, there has been some pushback from the community that this kind of corporatism of Bitcoin is maybe antithetical to the grassroots, community-driven, the cypherpunk ethos of Bitcoin, if you will. What's your kind of perspective on that?
Well, I mean, I was involved with the cypherpunks a lot of, decade plus before Bitcoin, and so I do understand this perspective. And the electronic cash kind of interest within the cypherpunks that predates Bitcoin was about a similar concept to what's evolved in Bitcoin, which is it's self-sovereignty, your asset can't be seized. Now, of course, the eCash systems of that time were effectively what we would call a stable coin today, so they didn't really have an investment aspect. So Bitcoin has an additional adoption driver, which is apart from the kind of permissionless innovation, unseizable asset, bearer cash, you have also an asset class, which is another driver because some people will buy or participate as an investment, but typically people who get involved with Bitcoin, it sort of changes their their time preference for the longer, and makes sort of they learn things, they get interested to learn about inflation, about monetary theory, and so on. So I think ultimately, groups of humans are organized as companies. Now, of course, there are private companies which are a family business or a dental practice, and then you have small cap companies on the stock market and big public companies that are doing something much more ambitious, like a company like Intel, which is making CPUs, or AMD, and so on. So I think it's just a natural phenomena as Bitcoin continues to be adopted. I think the other sort of surprising thing in a positive sense is that the incentives that make Bitcoin work. Originally, people mining, the fact that the sort of mining activity is interacting with the market for Bitcoin, that the incentives are what's holding it together, right? And it's interesting to see how scalable the incentives have proven to be, which is as the early stages of nation-state adoption, institutional adoption, now effectively Bitcoin, whether people expected it or not, has BlackRock and Larry Fink rooting for Bitcoin,
evangelizing
right?
it.
Yeah.
Well, we heard a little bit about your kind of discovery and supportive strategy, but since then you've become, I think, one of the most prolific, highest profile investors into Bitcoin treasury companies around the world. When did you make that jump, and what do you see really being the international opportunity?
I mean, I think it's been an interesting ride. So, I described how I first got involved with treasury companies by trying to sort of philosophically support the mission that MicroStrategy was taking. And then, because I have a bit of a trading background, got involved in trading that. And I think when they first started, the MNAV concept wasn't really talked about, but, you can look at it, you can create those metrics on past data. So, I think then I invested in Metaplanet was the next one, and then more recently in some of the other European ones like Capital B and H100. So it's quite interesting because different markets have different opportunities. There's usually something specific where a domestic company is maybe more attractive to the local investors or the local Bitcoin investors. And I think that could be for a few reasons. One is, perhaps the local community knows the management team and they trust them, or there's some cultural aspect to it. But also, there are typically tax differences. So different countries have different tax rules. And so, sometimes there is a tax arbitrage in the Treasury company where, the market doesn't have Bitcoin ETFs, let's say, and the tax treatment on Bitcoin is still out of date. And so you see that in Japan with Metaplanet. In France also, with capital B, there is some difference where you can hold shares that are French stocks in some kind of tax-advantaged account, which you can't do with Bitcoin. Other countries have similar situations going on, so that kind of is effectively a kind of arbitrage, and may eventually lead to improved tax treatment in the country. And of course, there are now more countries contemplating or working on approving ETFs. So I think in Hong Kong, for example, last year there were 3 ETFs introduced, which is fairly new, right? And I think Japan is also considering ETFs now. I mean, not in market yet, and maybe there's still some work to do. But it's interesting to sort of participate in that. And at least for me, I've tended to invest in companies where I know the management team, or have confidence that the management team are Bitcoiners. They're going to stay on the Bitcoin mission, and they're going to use the capital they raised to buy Bitcoin, and not like lose focus or not invest the Bitcoin. So really, you want to, I mean, from my perspective, because it's a Bitcoin-related investment, I want to have confidence that they're going to stay on the mission, stay focused, and also, I guess, have the capability to raise money, because it is partly a capital raising process that is enabling the companies to increase their Bitcoin per share. So if the team has some capital raising experience and capability between the team or their advisors or banking partners or things like that. So yeah, and I think there also have been a range of investment types. So MicroStrategy being the first has explored initially, well, firstly they used their cash reserves, then they took out corporate bonds, then they moved on to convertible notes, which are a little bit more beneficial because they were selling convertible notes at 50% conversion premium. So they could raise 150 million, buy Bitcoin with that, immediately, and if the conversion premium is reached, then they would only suffer $100 million worth of conversion. So you could see immediately that even if they started with a 1 times MNAV, that would still increase Bitcoin per share,
right?
Which you wouldn't be able to do with an ATM. And then, once the companies do have an MNAV premium, of course, they can do ATMs or ATM-like strategies and increase Bitcoin per share that way. And Metaplanet has been using moving strike warrants. Capital B has been using ATMs or something like it in France. And I think, of course, the last phenomena has been pioneered by MicroStrategy, or Strategy as it's called today, again, with the lineup of different preferred stocks they put in the market. They had 3 initially with kind of middling levels of capital market appetite, but the last one, STRC or Stretch, actually they sold a quite large amount, like over 2 billion in the first out of the gate, which is quite impressive. The other thing which I don't know if people are aware is that as well as the ATM on common stock, where they're able to work with a banking partner to sell new shares into the market, is because the preferred shares are also listed instruments, they're able to apply for and get approval for an ATM on the preferred shares.
Right.
So I think that may not have taken full force yet, but once the market values and builds an appetite, if it does, for STRC, and I think they already have ATM approval on it, they can perhaps more efficiently and repeatably raise capital by selling more STRC into an ATM market, where without that they otherwise have to engage bankers and find underwriters or large investment firms who will buy big tranches of it.
And I think we've seen some weeks where strategies run 4 or 5 ATMs concurrently, where they're selling across the entire universe of listed products. Well, Adam, we're almost out of time, but I wanted you to leave our audience with a little bit. You've touched on kind of the qualitative framework for evaluating these companies, but you've done a lot of work on the quantitative side and the valuation methodologies, and I believe you're the creator of the months to cover metric. So could you explain a little bit from a quantitative perspective how you invest or how you think about valuing these companies?
Yeah, I mean, the point with the months to cover metric was that if you're investing in treasury companies in different markets with different MNAVs, generally speaking, a higher MNAV is going to feel more risky because there's a prospect that the MNAV decays, and if it's 10, it's got a lot further to fall than if it's 2.
Right.
And so, the question is, how risky is that? And so one way to sort of risk adjust is to look at the months to cover. So what that's saying is, how many, if you buy a treasury company at 5 times MNAV and they are increasing the Bitcoin per share, how long do you have to hold it for their historic rate of increase in Bitcoin per share to pay for that premium? And surprisingly, at the point I was doing this, MicroStrategy was, I think their MNAV was around 2 or 2.5, and their months to cover was about 18 months. And at that time, Metaplanet was 5, which felt riskier, but actually the months to cover were only 5 or 6 months. Right. And so you can see that if you kind of adjust for that, it gives you a different perspective on how to think about the MNAV, because I think if you are able to buy a treasury company and stay in market long enough so that you reach par, which is to say that for every Bitcoin worth of money that you use to buy the shares, you have shares that contain a Bitcoin worth of Bitcoin, then you're at a kind of 1 times MNAV configuration, even if the company is carrying a higher MNAV. And the interesting point is, you don't have to be an active trader. At that point, you can hold the company, and their ability to increase Bitcoin per share is actually working for you in a passive way, where you are more insulated against the MNAV compression. So, of course, you never know if the rate of increasing Bitcoin per share slows down, and there's an interplay between the MNAV and their ability to increase Bitcoin per share. So if the MNAV is lower, generally the capital market structures are not quite as effective at adding Bitcoin to the balance sheet.
Well, that's all we have time for, but thank you very much, Adam.
Thank you.